Hello everyone, I'm delighted to introduce you to our next session, Is My Broker My Buddy? Before we start, please note that online trading involves the risk of losing your funds. Make sure you understand all the risks involved, exercise caution, and trade with brokers you trust that hold the appropriate license by the FSCA. Let's give a warm welcome to Mark Weetman, CEO at Unum Capital.
Thank you all. Thanks. I'm pleased that some of you have stayed towards the end here. So my presentation is My Broker, My Buddy, but I think it should be called Is My Broker, My Buddy? And my purpose today is to take you through what you should be looking for in your relationship with your broker. And hopefully that allows you to then wander around later on and choose from a fairly substantial number of brokers who are here. So just to start off, I'm Unum Capital. As you can see from my beard and my hair, or lack of hair, we've been doing this a couple of years. We got licensed in 1999, so we've been doing this a fair few years. So hopefully I've built up a bit of experience I can share with you over the course. Feel free to ask me questions at the end. I'm open for any questions, and hopefully I can assist you. So our mission as a business involves profitable, knowledgeable, and active traders. You know, from a broker's point of view, it's pointless if your client is not active, if he's not making money, and if he doesn't have some level of knowledge. So I think that's the first thing that you've got to ask yourself is, are you active, knowledgeable, and profitable? You know, if you're not that, I don't know why you're here. Next. This is an old slide from probably 20 years ago. And it used to say the stock market is one of the most easiest ways to make money. And it is. You don't get your fingers dirty, you don't have to sweat. You might sweat a little bit when you're in a bad trade, but it is actually one of the places where you can make a serious amount of money. But you've kind of got to know your stuff. You've got to know the rules, you've got to pick a good broker, you've got to learn some techniques, etc. But it certainly is a place where anybody can make money. And I firmly believe that. I've been doing this a long time. We have got lots of clients who are profitable. We have a lot of clients who are unprofitable. And you can choose to be in one of those buckets. You know, our clients typically have a couple of things in common. They have a passion. Don't do this if you're not passionate about trading. You know, if you want to make money, it should be in your blood. I say it should be in your DNA. You should really want to do this. You should want to beat this market. You wake up every day and you want to beat this market. Pick your asset class, pick your instrument, pick the market times that work for you, but just have a passion about it. Wake up every morning wanting to make money and to beat this market. Second thing, it's about profit. It's not about ego. Yes, there's a big, go to the braai, go to the parties, tell people you're a trader, that's fantastic. But that doesn't pay the bills. Make sure you're profitable. You know, and we'll talk about profitability just now. And the other thing is, nowadays you can trade the market anytime, anywhere, anytime, you know, on any platform. And that's changed since when I first started in the industry, when we used to have floor trading and you used to kind of shout it out on an open archive floor. Nowadays, all of you can trade on a mobile device at any time and any instrument. So, you know, pick and choose. Pick the best platform, pick the best instrument, the best pricing, the best broker. You know, as I say, in this fast-paced world, the problem with this is there's risk involved. And you heard the caveat emptor that was said before I started. There's a risk of losing money. So pick. It's like any relationship. When you first meet your wife, you know, you kind of find each other, figure out whether you have likes, dislikes. Do you have the same music? Do you want to go to the same places for holidays? When you pick your broker, be careful. Make sure you're aligned. Make sure that that broker resonates with you. And we'll talk about a couple of things you should watch out for, both on the positive side and the negative side when you're choosing your broker. So I intrinsically believe this. Your broker should be committed to these things. They should be fair. The pricing should be fair. There should be transparency. You should have an open relationship with your broker. You should be able to talk to your broker. You know, if he stops talking with you, then you should worry about it. Any relationship, if someone stops talking to you, you should worry that the relationship is breaking down. They should be dependable. The platform should work. It should work all the time. There shouldn't be reasons why the platform's down. And above all, your broker should be accountable. They should be empathetic and accountable. If you lose money, they should be empathetic. They should be trying to help you make money. They shouldn't make money when you lose money. They should be empathetic. You know, they should be accountable for their actions. If their system's down, they should be apologizing to you. You know, not making it your fault. Don't call you a toxic trader because you're making money. Your broker should be accountable. So here's two quotes, and these quotes are still relevant today. One is Brett McLaren, and the other one's Brett Duncan, Brett and Brett. These were two desk heads at two large brokers. This is 15 years ago, and it hasn't changed. You know, Basically, the market is available and open to all of you. You have the best tools, the best research, the best platforms, the best pricing that you will ever have. You know, these guys here have trading platforms better than when I first started in the market as an institutional broker. You at your fingertips have the best of the world. Best research, pricing, platform, you know, markets that are open 24/7. There's no reason why you shouldn't make money. You know, you have probably got more at your disposal than we institutional brokers had at our disposal 20 years ago when I first started. That being said, I don't know why this happens. This is what the experience is. These are real stats. This is 32 brokers, and a lot of them are here. And I think this understates the losses. You can see the best broker on this slide is probably 60% losses. So it means 2/3 of you in the room will lose money. The best broker on this slide is about 86% loss ratio. This shouldn't happen. You shouldn't have these sort of losses from retail clients. And I think it's because retail clients don't pick up skills, they're not aware that they're being gamed. There's all sorts of things that your broker can do to you. And that's why I say, is your broker really your buddy? Because sometimes he's not. He's not celebrating your wins, he's celebrating your losses. Because this stat is horrendous. 2/3 of you shouldn't lose money. I have another stat which says 90% of you today will lose 90% of your money in the next 90 days. And that's a stat we need to change. You know, as an industry, we've got to make retail clients profitable. Profitable for them, not just for the broker. Why does this happen? So this is research from Switzerland. And this is equity stockbrokers, but I think it's the same for FX and commodity brokers. Your stockbroker is basically a psychopath. He will take more risk. He's not empathetic. He's got a higher mad score than a psychopath. So when you deal with your broker and you cut to deal with him, whether you're an IB, a client, etc., just remember you're potentially dealing with a psychopath. He doesn't care. You know, he doesn't care about you. He just wants to make a profit. So just keep this in mind when you pick your broker. So like any relationship, these are the warning signals that I believe you should watch out for. And I was asked to kind of have the positive and the negative. So here, let's start with the negative. Unrealistic promises. We've probably all heard this. I guarantee you'll make a profit. No, there's no guarantees in the financial markets. You're only as good as your trading strategy, your win-loss, your stop losses, your risk management. There's nothing guaranteed in life. So unrealistic profits. Okay. Breakdown in communications. I'm sure if you've been doing this long enough, when you start having problems, your broker suddenly disappears. He doesn't take your calls, you can't get hold of the back office, you want to do a withdrawal, you're trying to get your IB revenues, suddenly he disappears. You know, he used to be your buddy when you were making money and you were both sharing profits, but suddenly, you know, when it goes bad, it goes really bad. He stops taking your calls. You know, run for cover. Your broker stops taking your calls, cancel and leave. You know, pressure tactics. You've all had this. I'm sure you've all experienced this if you've been trading long enough. The next time it will be better. Well, probably not. If you've got a bad trading technique, it doesn't get better. You know, the market doesn't change. It doesn't suddenly become, you know, nice to you because your trading technique doesn't work. So this story about redeposits, next time it'll be better, double up to catch up, reverse martingale, you know, these things don't work. Not for successful long-term traders. Get yourself a simple trading strategy that works, stick to it. You know what I mean? If it's not working, throw it away. Build another EA, come up with another strategy. You know, go do some more research. And then the last one is, if you are successful, beware of this. Your broker will game you. And I'm not saying all of the brokers, there are some bad actors and some good actors. But your broker potentially will game you. He'll widen the spreads on you. You'll wake up on a Monday morning and you'll be wanting to trade silver and your bid offer spread is not there. Or the price is not updating. Or the price is slow. Latency. You know, you've never experienced latency with a broker until suddenly you're profitable and then you can't get out of a trade. You got to worry about that. You know what I mean? These are techniques that a toxic, bad broker could do to you. If you start seeing these sort of things, once again, cut and run. There's tons of brokers out there. Pick one that suits you and looks after you. So that's the bad things. Hopefully, here's a couple of good things to watch out for. Make sure your broker's licensed. The FSCA in this country is well regulated. Our brokers are exceptionally well regulated. Go to the bottom of their website, go and have a look that they've got an FSP number. If they haven't got an FSP number, question why. They might be a regulated offshore broker that's then selling here, and they might be permitted to do that. But do some homework. If you can't find an FSP number at the bottom of the website, worry. There's a slide, there's a presentation after mine where they're talking, Gerrit van Deventer from the FSCA is talking, and he's talking about regulation. And he will explain what the regulator is looking for and how they hold brokers accountable. Look for that FSP number, verify your broker is regulated. Do your research. Go on to Hello Peter. Go on to one of these websites that properly ranks brokers, looks at complaints, etc. Look for the bad brokers and avoid them. But also, the good brokers, go and check them out, test them out, open an account, see if they live up to what they've been said on one of the research sites. Seek recommendations. If your network of relationships, someone in your relationship is trading and they're successful, they probably will recommend a good broker to you. We've seen in the JSE Stockbroking Awards that most people choose their broker because their friend told them or their network told them. And that's because they've had a good experience and they tell you about it. And they will also tell you if they've had a bad experience. If your mate's had a bad experience and he really hates a broker, then maybe listen to him. Maybe listen less to influencers and more to your friends. Trading front ends. Make sure that they've got uptime, that there's no latency, that they've got the instruments that you want, that the right prices, that they don't have some hidden spreads that you're not aware of, that your overnight funding rates aren't horrendous. I mean, everybody worries about zero spreads or low commissions. Worry about your overnight funding rates, because that's where you'll die. Because if you're trading at massive gearing, your funding is the most expensive thing you're going to pay. Your brokerage is negligible. Nobody cares about the spread or the commissions if you're trading large gearing overnight, huge funding rates. I mean, I don't know if you guys have seen, if you trade CFDs on cryptos, some of those overnight funding rates are horrendous. You've pretty much, after a month or two, you've paid for your entire position in funding. What's the point? You will never make money. So watch out for the costs, both direct costs and implied costs. Overnight funding, wide spreads, slippage, slow trading, latency at night. Reliable and accurate research. I can't emphasize this enough. We put out research every day. You're more than welcome to go and read it. Hopefully, it's profitable, it's actionable, you can trade it, it's not nonsense. Watch out for the guys who are selling you signals that are garbage, that are putting out research which will never make money. Go and test some of their trades. You'll see you never make money. So they're literally putting out research which is there to make you lose. Maybe do the contrarian, do the opposite of what they put out, because some of it is complete garbage. So go with analysts and analysts who actually trade, who can make money. Training and education. The one good thing in the industry now is that there's a lot of training and education available to you. Pick up your broker, ask him for training. Get knowledgeable. With knowledge comes power, comes profit. I always say, if you look at a hierarchy, you start with information, you turn it into intelligence, and then you turn it into action. A lot of people will give you information. What they don't give you is intelligence and the action. Ask your broker, have you got any real good trading ideas? Don't send me this waffle research. Who cares if it's non-farm payrolls on Friday? Tell me what to do with it. What should I be doing with it? And then the last thing is trading tools. Fantastic trading tools out there nowadays. Use them. Guys like TipRanks. I'm not affiliated with any service, so I can name them. Guys like TipRanks, Estimize, TradingView, Investing.com. These things didn't exist 20 years ago. You guys have so much knowledge and so much information at your disposal that we didn't have back then. But the problem is, I still don't understand how, after all of that, we can't make money. You should, with all of these things here, if you do all of these steps and you look after your risk management and you come up with a simple trading strategy that works and you repeat and rinse, repeat and do that time after time after time, you should make money. If you don't, maybe, as I always say, go do something else. Go paint fences or sell ice creams. Maybe trading's not for you. Okay. I've gone through that rather rapidly, so hopefully I've got a few minutes for Q&A. Fire away, guys. I've got one question at the front.
Thank you so much, Mark, for that wonderful presentation. My question is, you mentioned brokers with FSP regulations. I've noticed that there are those that are in the market but don't have the regulatory licensing, but they'll claim to have a proven track record, and other traders will actually vouch for them, and will have made a lot of money with those particular brokers. So is that an automatic red flag, or is it is it a prerequisite? Or?
So the only answer I can give you is, if you're not in this country, if you're dealing with a non-regulated broker, it's illegal. Gerrit van Deventer will tell you just now, they're going to enforce against those brokers. Deal with a regulated broker. Whether that broker is regulated here or an offshore broker that's been permitted to then market here, Gerrit can cover that later from a regulatory point of view. But for me, it's not just a red flag, it's illegal. It's improper, it's illegal, and I wouldn't even entertain dealing with a broker that's not either a Cat 1 for trading, advice and intermediary services, Cat 2 for discretionary asset management, and Cat 2A for a hedge fund. Go look at their license, make sure they're correctly licensed. And if a guy's advising you and he's got a Cat 1 license, which is advice and intermediary services, and he's advising you on derivatives, but he doesn't have that on his license, that's also improper. He needs to be correctly licensed. So he can't suddenly have short-term insurance and be telling you about derivative products. It's just not proper. Well, it's illegal. That's what it is. So unfortunately, I draw a very straight line. You've either got a license or you don't have a license. Can't be everybody shocked. I've got to have some. Guys, I'm going to say there are some really good brokers here. I've painted a very bleak picture, but that's to warn you. Go in with your eyes open. You're there to make money. It's your hard-earned cash that you're putting on the table and betting with. So there are some good brokers here. Just pick and choose the good guys.
Good day, sir. I feel like most brokers are dealing desk brokers, which is something that it's not mentioned a lot and it's not spoken about. A few of them are non-dealing desk, and some don't even disclose if they are actually dealing desk. And I need to know, how would one go about in actually navigating that, because I feel like also they might even be regulated, because FSCA can't actually monitor all of that.
So it's a very good question. So I'm going to just explain your terminology and put it into maybe different terms that other people might have come across. A book versus B book brokers. You're talking about, when you talk about a dealing desk, you're talking about guys who are running a risk book or a B book. And they're taking that on their own balance sheet and they're internalizing some of that trade. Whereas an A book, A type broker, or otherwise known as a straight through processing, direct market access, there's a couple of different terms for it. And yes, the market is split into two distinct camps. One is the A type book broker, takes no risk on their balance sheet, passes your trade through to the market, and their job is to make money on flow. They want you trading, and they make spreads and commissions. They don't bet against you. A B book broker is allowed to internalize it on their own balance sheet. That might not make them bad. That's a business model they've decided to do. And I think you could then take the B book brokers and split them into the bad guys who will do everything to make you lose. They'll widen spreads, the trading platform will go down, there'll be latency. You'll start picking it up, you know what I mean? So I don't think you want to say everybody who internalizes the risk onto their own balance sheet is bad. They could be good actors. Someone somewhere is writing that contract for you. Remember that. It's either here, the guy who's facing you, or a liquidity provider in Europe, or a liquidity provider of his. These things hardly ever get to a market. They're internalized on someone's risk book somewhere. Okay. So I don't have an easy answer for you. What I would suggest is pick up the phone and ask them, are my trades going directly to the market? If they say no, then say, okay, what guarantee have I got that you're not going to game me, that you're not going to bet against me, you're not going to widen my spreads, you're not going to give me latency on my trades, you know what I mean? Unfortunately, you'll pick it up quickly over time if they're starting to game you. Okay.
All right, thank you very much.
Okay, no problem. Anybody else? We've got a minute or two. Wow. Shirley, come on, someone from the back. Give me a tough one. Don't ask me what trading strategies work. You'll have to find that out in time. You'll have to find out what works for you. I actually, let me speak to that one, seeing I asked myself that question. What trading strategies work is the trading strategy that's right for you. Now, you won't like my trading strategy because I'm a pairs trader. I'm a mean reversion trader. I expect the market to be like an elastic band. I expect it to always come back to the average. So if you plot an average on something, I'm kind of expecting the market to come back. And that's why I'm a pairs trader. So I'll go long one thing and I'll go short another thing against it because I expect things to come back. Now, that doesn't work for other people because they're not mean reversion. They're breakout. Now, I've got one of the traders on our desk. He will only trade breaks. So he'll wait till something breaks the level and you go, there's a new pattern here, I'm going to trade with it. There are other guys on our trading desk like Piet Serfontein. He's an Elliott Wave trader. He will stick habitually to Elliott Wave. It doesn't actually matter what strategy you employ as long as you have a reasonable win-loss ratio and you make more money than you lose. That's all you need to measure in life. You don't even have to have that many winners. I chatted to a guy earlier who was a scalper. He had a 30% track record, but when he was right big time. Now that works for him. That scares me. I don't want to be right 30% of the time. So I'll tell you from history, if I took my 20 years of trading, 25 years of trading, I'm probably right, if I'm lucky, 60% of the time. But that's enough. If you're right 2/3 of the time and you make more money on a winner than you lose on a loser, running stop losses and risk management, you will make money consistently. If you're going into this market to make 100% in the first month, bye-bye. You'll be dead the second month or the third month because you might make it in the first month, but you'll blow it in the second. So that's binary for me. Okay. So I can't tell you. You find something that works for you. Yeah. And there's so much good stuff out there nowadays because we used to have just technicals and fundamentals. Now you've got AI-assisted stuff. You've got all sorts of stuff. Guys writing stuff in Python. Really good stuff out there. Just go look for it. Don't buy an EA off the shelf that you've never tested. Make sure it works. Okay. Guys, hopefully I've given you some insight. Hopefully now you can wander around, ask a few questions, find a broker that works for you, and make money. That's all we're here for at the end of the day. Go well, guys. Trade safely.